Something big just happened. The numbers just came in and it shows us something that most people simply aren't ready for. The economy was already slowing before Biden left office. GDP growth dropped.
Gross domestic product number for the fourth quarter comes in at 2.3%.
Inflation just started creeping back up.
It is not your imagination. You are paying more for goods and services than you were a year ago. Inflation hit 3% for the first time since June.
Businesses cut spending and jobs.
Artificial intelligence might help banks cut as many as 200,000 jobs in the coming years.
Microsoft is planning more layoffs this year.
Meta, owner of Facebook, is trimming 5% of its workforce.
And that's just the beginning. The federal government is preparing for mass firing.
CBS News has confirmed a nearly 90% cut, totaling nearly $60 billion.
And major corporations, they're shifting to automation, slashing jobs in the process.
Meta, Amazon, Microsoft, and Alphabet are now signaling as much as $320 billion in capital expenditures among them this year.
And consumer confidence is starting to collapse.
U.S. consumer confidence fell at its sharpest pace in 3.5 years in February.
The Consumer Confidence Index dropped by 7 points in February. This marks the largest monthly decline in the index since August of 2021.
So what does this mean for me and you? Will prices keep rising? Will jobs be harder to find? And is this just the start to something much bigger? Let's break it all down. Before we talk about what's happening now, let's look at what happened in the final months of Biden's presidency. Because while many say the economy was strong in 2024, the new data tells a completely different story. Q4 2024 growth slowed. The U.S. economy grew at just 2.3%, down from 3.1% in the former quarter.
The U.S. economy grew at a solid 2.3% annualized rate in the fourth quarter of last year.
That's a clear sign that things are cooling even before these new policy decisions. Corporate investment, one of the key indicators of future economic strength, plummeted by 5.7% in that same quarter. And spending on equipment dropped 9%, a strong indicator they were already bracing for uncertainty. Inflation crept back up, while many believed that inflation was under control. The Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures Index, already rose by 2.4%. That's higher than the Fed's 2% target. In other words, this is before all the new policy changes of 2025. Inflation was already creeping back into the economy. And at that same time, government spending increased. Washington was still pumping money into the system, with a 2.9% increase in spending, which may have hidden some of the economic slowdown. So while many were saying the economy was still doing great, the numbers tell a completely different story. Businesses were already cutting back. Inflation was not going away. And the economy was already slowing before 2025 even started. And now, just weeks into 2025, we are now starting to see massive layoffs. Not just one sector, but across the entire board. Here's what's happening right now. In Washington, the federal government is preparing for one of the largest reductions in their workforce in modern history.
Overnight, massive cuts at another critical agency, the Department of Veteran Affairs, announcing the dismissal of more than 1,000 employees.
This could affect as many as 216,000 probationary employees.
The Trump administration has directed federal agencies to submit reorganization plans by March 13th, 2 weeks from now.
President Trump's administration released a memo within the last hour telling federal agencies to plan for large-scale layoffs. Agencies are being told to develop reorganization plans no later than March 13th.
We're cutting down the size of government. We have to. We're bloated. We're sloppy. We have a lot of people that aren't doing their job. We have a lot of people that don't exist.
And some reports suggest up to 500,000 federal workers could be let go from their positions. This includes cuts in major departments like Veteran Affairs, Homeland Security, Health and Human Services, agencies that impact millions of Americans, many of which have children and families that they need to provide for. Without this role, they could walk into significant financial problems. When governments take on massive debt and print money, the dollar weakens and inflation surges, reducing your purchasing power over time. Inflation hit 3.1% in January. Food prices are up 25% since 2020, and rent has surged 20% nationwide. And U.S. debt just surpassed $34 trillion. Meanwhile, credit card debt just hit $1.13 trillion. Historically, gold and silver thrived during inflationary periods. During Trump's last term, gold surged 65%. If history repeats, we could see gold hit $4,200 per ounce. That's why protecting your wealth isn't optional. Lear Capital, the sponsor of today's video, a trusted leader in precious metals for 27 years, makes it easy to buy gold and silver with a 24-hour risk-free purchase guarantee with physical gold and silver from Lear Capital. Your wealth can't be frozen by banks, devalued by inflation, or erased in a digital financial meltdown. It's real money you can hold in your hands. Money that's protected wealth for over 5,000 years. Call 855-271-1871 or visit trylear.com/John Williams today to get your free gold and silver wealth protection kit. No obligation. You can even roll over your IRA or 401k and earn up to $15,000 in bonus coins. Don't wait, call now. 855-271-1871. But it's not just the government. In the private sector, major corporations are cutting jobs at an alarming rate. Meta, Microsoft, Starbucks.
Last month, Facebook's parent company said it planned to cut 5% of its workforce.
Meta Platforms is preparing to lay off approximately 3,600 employees.
Starbucks announcing major layoffs with plans to let go of 1,100 corporate employees.
Have already all announced layoffs so far this year in 2025. And the reason? Many of these companies are shifting their focus to artificial intelligence and automation. They're not just cutting jobs to save money, they're actively replacing the human workforce with automation. And the real question is, if the government is cutting jobs and corporations are cutting jobs, what does that mean for the overall economy? At the end of 2024, the average 401k balance was $131,700, one of the highest on record. That sounds great, right? But here's the problem. 401k balances only benefit those who have money to invest. Meanwhile, credit card debt is at all-time highs.
More than $1 trillion. That's how much it would take to get Americans out of credit card debt right now in this country.
With delinquencies surging across the board.
Alarming new numbers that show rising default rates on credit card loans, now at the highest level since just after the 2008 financial crisis.
Mortgage delinquencies on government-backed loans have hit 11%. That means more people are falling behind on payments, struggling even to afford basic living expenses. And while people are still spending, consumer confidence has taken its biggest drop since 2021. Americans are worried and they're pulling back, and they're preparing for a tough economic period ahead. This isn't about just job losses, it's about what happens next. Because when tens of thousands or potentially hundreds of thousands of Americans could lose their jobs, many of which are highly educated working professionals now entering the job market, the impact hits more than just one sector. More than 53% of federal workers have a college degree. Nearly 1 out of 5 have an advanced degree. If mass layoffs hit, these highly skilled workers will not just simply disappear. They will flood into private sector jobs, intensifying competition in key industries like consulting, tech, healthcare, education, and so many more. And where will this hit the hardest? Washington, D.C., Maryland, Virginia, Atlanta, and many cities all across America, where federal jobs make up a large percentage of their workforce. Job competition in these areas could get a lot tougher, especially with thousands of motivated, highly skilled, and educated workers entering the workforce desperate for an opportunity. But here's the kicker. 14.5% of all federal workers are already questioning their current job stability. Not all will wait to get laid off. Many will decide to jump ship early, shifting their focus on new industries, reshaping local economies, and making hiring slightly more competitive. This could be one of the biggest employment shakeups that we have seen in many years. So where does this all go from here? Will the economy slow even further? Will inflation continue to get worse? Will layoffs accelerate? And more importantly, what should you do? Because here's the thing, periods of economic uncertainty bring forward massive opportunity. For entrepreneurs, this could be a pivotal moment to build a great business and hire top talent from companies that are downsizing and restructuring. For investors, a key moment to watch where billionaires are putting their money and investing. And for employees, a key moment to recession-proof your career. Learning new skills, networking, and staying ahead of the curve. The economy is shifting. The big question, are you ready for it? Now, what I believe happens next is I think we're gonna see millions and millions of Americans shifting their careers over the next year, 2 years, 3 years. We're gonna see a lot of businesses moving into automation. You're gonna see a lot of government employees now looking for work. And I think you're gonna see a major opportunity to get some incredible talent and build some really great businesses off of this shakeup, off of this change, and off of the opportunity that's being formed through this economy. With automation, with technology, with job outsourcing, with all of the new opportunities that we all have right now, it presents, I believe, the biggest wealth building period that we'll likely ever walk through. You see the amount of wealth that's being created. The rich are getting richer inside of this trend. And it's up to all of us to leverage our skills, leverage our network, and to build a great business. I personally believe that 5 years ago, saying you make $100,000 a year, and I've talked about this before, that meant something. Now $100,000 a year is considered low income in most cities. This is going to continue to ramp up. $100,000 a year, it's going to be like making $500,000 in a year or two. It's just going to continue to get harder and harder and harder. So if you can build a great business and you can get around and really build relationships with great employees, business partners, and merge these relationships, you're going to position yourself to capitalize on what I believe is going to be a lot of distress in a lot of real estate markets all throughout the country. You're going to see incredible opportunities. So what is a business? A business is a makeup of incredible people offering a great service that is extremely valuable, more valuable to the consumer than their own currency, right? They're trading their currency for what you have. You have all these people that are likely going to be entering the workforce desperate for a great opportunity inside of a shakeup in the way in which people spend money, where they consume their information. I mean, look at all of the information now that's being spread online, all of the buying decisions that are now happening online. It's going to continue to ramp up. And so I think this is just going to present a major once-in-a-lifetime opportunity to capitalize on all this. This is the moment. From now until 2027, 2028, I think if you play this right, you'll have generational wealth. And if you don't, it's going to be a lot harder. It's going to be a lot harder to make it. You can already see it across the board right now, living standards in America. Just imagine what this is going to look like as this wealth consolidates with large corporations. As it consolidates and inflation likely continues to soar in the next year, 2 years, 3 years, what are these large corporations, these billionaires and very wealthy people going to do? They're going to buy property. They're going to invest and invest and invest. Look at MetLife Insurance. They made a prediction. CNBC, all of these articles have been talking about it, saying that 40% of all single-family homes will be owned by investors in the next 5 years. 40%. You think that's going to be, just slow and gradual? No. It's going to ramp up dramatically over the next couple of years. And they're going to start buying hundreds of thousands and millions of properties. And this is the moment. This is the moment to capitalize on all of this. For more information on today's sponsor, you can click the link in the description just below this video. Catch you next video.